This is your Monex Metals Market Update with Mike Maroney.
Good afternoon. It's Monday, August 14th. My name is Mike Maroney, and I am coming to you today from the Monex Precious Metals studio. Let's do our week in preview. And as usual, what we're going to do first is talk a little bit about what happened last week. If you think about what was going on last week, all of the news was about North Korea and the reaction to our president's statement as far as fury and fire was concerned. And if you look at what took place in the precious metals market, silver, which traded as low as 1610 on Monday of last week, traded as high as 1724 intraday before backing off to about 1710. And gold actually tested very key resistance right up at that 1297 area, but it wasn't able to break through. Now, calmer heads have seemed to prevail, and what we've seen a little bit today is some profit taking in gold as gold is pulled back down into the low 80s. But silver seems to be very well bid, still maintaining a price well above $17. Now, a lot of this may also be predicated on a cycle that has developed all the way back to 1970. And what this cycle is, it's a bull-bear cycle that has existed in the dollar since 1970. If you go back to 1970, the US dollar index was trading at about 122. Now, what we've seen over the last 40 plus years is typically a 10-year bear cycle in the dollar, and then typically a 5-year correction, and then a 10-year bear cycle, then a 5-year correction. And many analysts believe that we are once again re-entering into that 10-year bear cycle as the US dollar has already dropped all the way from 104 down to 92. And if you look at the overall circumstances that exist here in the United States, many people believe the dollar could be headed much lower. Let's go back to 1970 when the dollar was trading at approximately 125. And if many of you were alive back then, you may remember when President Nixon actually closed the gold window back in 1972. And what that meant was international banks were no longer able to come to the United States and convert their dollars for gold. Because what happened during Bretton Woods and after World War II, the U.S. agreed to convert $35 U.S. into gold for any central bank as a way to keep the U.S. in check as far as its spending was concerned. And once Nixon took us off the so-called gold window in 1972, the U.S. became what is known as a fiat currency. And what is a fiat currency? It is a currency backed by the good faith of government. And if there's one thing we know about government, they have a tendency to overspend, and fiat currency has a tendency to become worth less, and inevitably worthless. But during that cycle, we went from 125 in 1970 all the way down to 82 in 1979, 1980. Gold rallied from $35 in 1970 all the way up to $880. Then what took place is we went into a 5-year bull market in the dollar as we saw interest rates skyrocket, and the dollar rallied from 82 all the way to 165 in 1985, a tremendous move. Then in 1985, we saw the dollar drop from 164 all the way back down to 81. It was basically cut in half as far as its value as of 1995. And interestingly enough, if many of you may remember the 1987 stock market crash, many people believe that that was predicated on the fact that the dollar was dropping precipitously and foreign investors were pulling their money out of U.S. stocks because even though the stocks were maintaining value, the dollar was dropping so fast it didn't make sense to invest in U.S. equities. Then in 1995, up until 2001, we saw a major dollar rally as we had what was known as the tech explosion. Then the dollar hit a high of 122 in 2001. Then we experienced what was called the tech wreck. We saw a major sell-off, and inevitably the dollar dropped from 121 all the way back down to 72. Now, since that point, we've had our typical 5 or 6 year bull market as the dollar has rallied from that 72 area all the way back up to 104. But it looks like we could be in the beginning stages of that next 10-year bear market as far as the dollar is concerned. And when you consider that two of the world's powers, Russia and China, are both hell-bent on debasing the US dollar as the reserve currency of the world, it's no wonder they are the two central banks that are accumulating gold faster than any other. And what we're looking at now, since the dollar peaked at 104 and has dropped back down to 92, is we've seen the price of gold rally and test key resistance up around 1,300. If we are just in the beginning stages of a 10-year bear market in the US dollar, now may be one of the greatest times to own precious metals. There are a lot of reasons why the dollar could continue to drop. Political uncertainty, debt issues, major problems as far as the pension plans and the actual states and cities and municipalities as far as their debt issues and pension programs are concerned. And what we could see is the dollar make lower lows in the years to come. It's a great time to own precious metals. So give us a call here at Monex today. Thank you.